While the entire capital goods sector is abuzz, you have stocks of Siemens, which is sitting at all-time high level. Thermax reported a very strong set of numbers just a few days ago, and that too was seeing a surge of around 6 to 7% on that day. And then you have Cummins, which is sitting at all-time high level today, and that's because the earnings from the entire sector so far has been quite strong. Plus, the commentary going forward suggests that the momentum is sustainable. In fact, let me start with Cummins itself, which has gained as much as 71% over the last 1 year. Siemens has seen an upsurge of around 30%, so a bit of catch up which is available, and ABB too is up around 38%. What really stood out for Cummins in the quarterly earning was the fact that numbers were a beat on all parameters, whether it was the top line or the margins and the PAT figure. They were all better than expected. In fact, it's the strong demand coming in not only from the domestic market, but even international market is seeing a bit of pickup, and that's the key reason why we saw that beat on the top line. Additionally, the gross margin performance is also quite better. That's because we have seen the commodity prices softening, and that's having a trickle down effect into the margins as well. The commentary also overall was quite strong. They said that with the recent push coming in the union budget, the government capex is likely to sustain the momentum. They will try to hold on to the margins, but they did not commit to that. However, they did say that the Q4 performance might be a bit of weaker versus Q3 because seasonally speaking, Q4 is a bit of a weak quarter for them. They remain cautiously optimistic about the short to medium term outlook, but they haven't given an FY24 guidance on account of the uncertainty that we are seeing. So to summarize in terms of the numbers that we have seen so far, Thermax was above estimates, Cummins was above estimates as well, whereas ABB will report its numbers on February 10th, so we'll watch out for that. And then you have Siemens India reporting numbers on February 14th, so that will be critical to watch. Valuation wise speaking, all of these counters are very expensive on a PE basis. They trade anywhere between 60 to 75 times, but on EV to EBITDA basis, Thermax is currently at around 30.5 times, and that compares with a 5-year average of around 25.4 times. Cummins too is trading at 35 times versus 28 times average. ABB India similarly is at 52 versus 5-year average of 44 times, and Siemens is at 43 times 12-month forward EV EBITDA, and that compares with the 5-year average of around 33. So the bottom line being that the valuations are much higher than the 5-year average, but that's also because that we are at a point in the cycle wherein we are likely to see an upcycle, because remember, all of these stocks are very cyclical in nature, and there are analysts and experts who are now believing that maybe we are looking at a pickup in the entire capex cycle, and that's why all of these stocks are excited.
If you like this video, then like, share and subscribe to ET Now.